Yes, today we want to talk about smart money concepts. SMC. SMC. Okay, when we talk about SMC, what do we mean? SMC. What do we mean? This simply means smart money concept. And when we say smart money concept, we mean the financial institutions that trade forex. We mean the big boys that trade forex. We mean the banks that trade forex. They have a lot of money to move the market, and they have a lot of skill and strategies they use in drawing liquidity from the market so that they will be able to place their own large volume of order at major zones in the market. Now, if you don't trade in the same direction with the smart monies, with the big boys, with the financial institutions, it is likely you will be the liquidity they will draw. They will draw out of the market when they cash out. You understand? Those are the things we actually want to talk about in this topic. How does the smart money move? How does the smart money trade? How do they draw their liquidity? Now, what is order block? What do we refer to as points of interest? You understand? I wouldn't want this video to be a very long video. I would have said, okay, let's also go into supply zone, demand zone, which is also the other blocks. Now, the other block before a major upward movement is your what? Is your demand zone. Is your demand order block. And that order block before a major downward move is your what? Is your supply demand, is your supply zone or your supply order block. Now, how do we identify another block? Now, I always tell my students, before you even identify order block at all, you must know the current trend of the market on that particular pair you are trying to trade. Now, I'm also using Euro USD. Now, if I want to look at the order block for this major move, now look at this major move here. There's a major move here. Look at this major move, this major upward move. Now, how do I draw the what? The order block that projected this move. Here is the order block. The order block is just the opposite candle before that move. Now, what are these candles? All these candles here are green. If you look at them, they are all green, moving upward. Now, what is the opposite candle before it? That is the red candle before the major what? The major move. Now, look at the candle. This is the candle. Here, from here to here. That is the order block. And if you project this order block forward like this, let's just draw a box, a rectangle like this, and you project it forward. All this place here is your what? Is your point of interest or your area of interest. I don't know if you understand. When you project your order block to the future, you will produce what we call point of interest or your area of interest. What you are trying to tell us is that anytime the market or the price comes to this zone, something must happen. It is either you are buying from that area, or if it is a supply zone, you are selling from that area or from that zone. I don't know if you understand what I just said. Now, your order block is the opposite candle before your major move. If your major move are series of green candles, all you just have to do is to look for that red candle before that led to that major move. You understand? Now, if your series of moves are bearish, maybe green red candles, all you just need to do is look for the opposite candle before the bearish moves, which is going to be your what? Your green candle. Now, in this case here, now look at, this is also a move, a major move. This is a major downward move. Now, where is the other block for this move? It is this green candle here. This green candle. There's a green candle in between. Let me look for a way to stretch. Very good. Now, look at this green candle here. This green candle here is your supply zone. That green candle is your bearish order block. Is your bearish order block. Is the one you will just mark and project to the future. Now, what do I mean? You just do it like this on it. Make sure you're starting from it. Let me click on that again and come to here exactly. Now, exactly. You just project it to the future. Which means that anytime you have the market coming down, and come to this zone, you should be ready to what? To short. You should be ready to sell, to initiate a sell trade from that zone. Anytime your market comes here, and don't forget, your order block can only be tested once. It can only be tested once. After being tested once, it becomes invalid. It can only be tested once. It's only on rare cases that you have it getting tested the second time. But in most cases, it gets tested once. When the market comes back to it the second time, it will no longer be valid. You understand? So, yes, let's continue from where we stopped before our interruption. Now, what you really need to know for you to be able to mark your order block appropriately, because I discover a lot of traders are finding it very difficult to be able to mark their order block appropriately. Now, how do you mark your order block appropriately? It's very simple. All you have to do is to know where that move starts from and where it ends. Where this major move we are talking about started from is what we call your swing low. And that is actually where your order block is. Some people will want to mark order block and they'll be marking places like here. They'll be marking here. They'll be marking here. No, you are wrong, Oga. If you really want to mark the most appropriate order block, it is from here, where your move started from. This is your swing low. I call it what? Swing low. Now, your swing high is also very important. This is the top of your what? Of that move, or where the move ends. The move started from here and go, okay, let me take the arrow instead. The move started from here and go all the way. No, I said arrow. This one. The move started from here and go all the way up to this place. Now, what happened in between here is none of your business. What happened in between here is none of your business. You are not concerned. So if you want to draw your order block, you must draw your order block from where the major move starts from your swing low or your swing high, if it is a bearish market. Now, if you want to sell in this same market, where you will mark your order block from will be somewhere at the top here. It will be somewhere at the top here. This is where you mark your order block from if you want to sell. What happened in between here, from here, all these moves, all these ones, has nothing to do with you. Mark your order block here and wait for the price to come to this zone before you what? Look for your step 1, 2, 3. Now, what do we mean by your step 1, 2, 3? Your step 1, 2, 3 simply means the takeout of liquidity sweep, your break of structure back into the direction you wanted to shoot, and the retest back to the zone. That is your step 1, 2, 3. Let me quickly say that again. Just very step 1 is what? Is the take of liquidity, the sweep of liquidity. Your second step is what? Is the market having a break of structure back into the direction that you want your market to what? To go, the direction you want to trade. Then number 3 is what? Allowing the price to retest your zone. Then you shoot. If you do that, your losses will be reduced to in fact, your win rate will be more than 80-85%. Or yes, if you follow all these things I've said or that I've mentioned, your win rate will be more than 85% all the time. You understand? Because what the smart money always look for is to what? Liquidity sweep. They will first come into the market and sweep away retail traders' liquidity by making the market to first go and eat your what? Your SL. The market will first go and eat your SL when the market eats your stop loss. You understand? They will allow the market to come again in the direction as your second confirmation. The third confirmation, allow the price to retest your zone, your point of interest, and shoot. But in most cases, the 3 steps may not play out. It may be the first one and the second one, but make sure that the first step and the second step plays out. Sweep of liquidity, your first step. Second one, allow the market to create a BOS in the direction you want to trade. That is final confirmation. Then you just shoot. If you shoot, the market will only retest a bit, probably in the opposite direction before going in your direction. And with this strategy, you'll be able to have a very high risk to reward ratio. You understand? You can have 1 to 5. You can have 1 to 7. You can have 1 to 10. Even 1 to 15 is possible if you allow these confirmation steps to play out. Allow the market to come to you. Don't rush to the market. Some people, because they want to quickly enter the trade, what they will do is to quickly run and go into the market, and at the end of the day, the thing will just take them out by eating their stop loss. Thank you. Make sure you like, you subscribe, and you share this video.